You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from a futures options perspective. What's going to make it on the show every week? I don't know. You got to tune in every week to find out. We don't know until we run the numbers right before showtime, listeners. It's one of the fun ones. You can't really plan too far ahead for TWIFO. Maybe it's going to be dairy this week. Maybe it's going to be metals. Maybe it's going to be energy. Maybe it's going to be equities. Maybe it's going to be ags. You never know. Rates. What's going to sneak in there? FX. Got to tune into TWIFO every week. If you want a sneak preview, you can see right before showtime, our friends over there at CME do tweet out the movers and shakers reports. That's a little bit of a spoiler, I suppose. We do tweet it out as well. So that'll give you your first taste, your first inkling of what's going to be going on the show. Of course, if you like what you hear on the on-demand side, make sure you keep rating and reviewing wherever you get the content on whatever platform you're using to listen to us out there these days. And of course, if you want to go above and beyond to get more living in your life, you want to get great pro Q&As. We had Scott Nations on our pro Q&A on Tuesday answering all your questions about vol and the sell-off and the rally and everything else under the sun. Then, of course, we have Come Up Tomorrow, Options Oddities for all you pro folks. You want to get more of that in your lives. You want to get live streams for this, for every other show we do here on the network. And, of course, you want to go and play along in our giveaways, get access to great giveaways. TheOptionsInsider.com/pro is the place to go to learn more. And let's see who's joining us in the old FTSE Russell CME Group hot seat this week. They tell me he has sorted out all of his legion of issues that prevented him from joining us last week. We shall see if that is the case. They tell me I am joined once again by the once, the future, and indeed present Dr. Vix, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, are you there, sir? Can you hear me?
I am here. I can hear you. I don't know what was going on before.
Aha!
Yeah.
The technology gods have smiled upon you once again. Welcome back to the show, sir. You sound like you are fit and in great health.
Oh, God.
Just not leave it there. Oh, God. That's his response.
You know what? You always put a pep in my step. So right now I feel as good as I felt in 8 days. But
there we go.
I think the Rhoads household was the last household in America to test positive.
Oh, that's always fun. Yes, we went through that dance not too long ago.
Through the house, but oh well.
You are upright. You are living. That is a good thing. You are mostly conscious, it sounds like. So let's get rolling before the vid catches back up to you. It's time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. It is that time, listeners, the time where we break down what is moving and shaking to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. Mr. Rhoads, if you are up to it, sir, I will let you do the honors. Where should we begin our journey this week? Uh-oh. Has the vid overtaken you already, sir?
No, I'm here. I said, let's do the light side.
Light side.
Because,
all right.
To make me feel better.
Sounds like a plan. All right. To the light side we go, listeners. After having a very heavily biased week last week, we can only get a dark 4 together for the bot. Everything was green last week. It's a little bit more evenly split this week, listeners. We could easily do, let's see, we could do about a top 10 for the upside. Then everything else is red out there. So a little bit more evenly split this week. But to the light side we go, listeners. Actually going to go outside it really quickly because our old friends Russell 2000 just barely missing the top 5 this week. They're up about 1% this week. So they're actually coming in at a number 6. Our actual number 5 this week. There's a lot of equities this week. E-mini S&P 500, you may have heard of that one. Up 1.75% this week. Number 4, keep it in the E-mini realm. The NASDAQ 100 up 1.79%. And then saying to all the other equity kids, hold my beer. It's the Dow. The Dow taking the top spot, at least for the equities this week, at number 3, up 1.87% this week. Then we go outside of the equities to the energy realm, where we're going to visit our old friend Nat Gas, one of our frequent offenders. This week it is number 2 to the light side, up 3.11%. That's actually kind of a quiet week for Nat Gas, but it's good enough for the number 2 spot this week. And then number 1 also hanging out in energy this week is heating oil, up 3.75% this week. All right, to the dark side now we go. Number 5. Uncle Mike, cover your ears. It is silver, off 3.65% this week. Maybe the werewolves in the audience are celebrating the demise of silver this week. Number 4, back to energy again. So we go from metals right back to energy. They keep sucking us back into energy. It's WTI, off 3.71%. Number 3, we're jumping over into the ags and then drilling down. Not talking the green stuff. We're talking the moving stuff, the mooing and the oinking stuff, because it's lean hogs. Off 5, almost 5.5% this week. The number 2 hanging out in the ag still, it is our old friend Chicago wheat, off 8.17%. And then number 1 to the dark side, so we got number 1 to the light side and to the dark side this week, is in the energy. So kind of an interesting split complex this week. It's RBOB, number 1 with 9.3%. And I think, Mr. Rhoads, because we literally are just festooned with energy this week on both directions, I think we have to start there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment. You guys know where to go to find this. First off, begin your journey where you should always go, cmegroup.com/TWIFO, TWIFO. Once you're there, go into that asset class drop down. You're going to go down 3 slots to energy. Then we have our an embarrassment of riches in the product family selection. So a lot of places to start. Let's go out to the once and future Dr. Vix. Mr. Dr. Vix, sir, A lot of energy lighting up this week. To the light side and to the dark side, what is lighting up your tape and catching your eye out there this week, sir?
Well, how do RBOB options trade? Because
not much.
It's not much. I'm just curious with such a big drop. I know I always take you to the obscure one, and then months later you forget that I always make your life difficult and you invite me back.
There are 1905 on the tape right now, so more than Oats. So it's respectable, but it's not exactly a Eurodollar or an E-mini.
I was just curious if there was anything that really stood out with such a big move last week. That's without going through all
of that. Nearly a quarter, 553 of the 3 calls going up in October. By the way, the RBOB right now, listeners, at about a $3, 3.02 right now, and it's the 3 calls in October doing 553 contracts. That's actually a lot for RBOB, and almost all of that today. 503 today, and then 50 yesterday, Mr. Once a few. And the 3 quarters also doing 400 calls, kind of scattered more throughout the week. So 3s and 3/4 calls in October seems to be the name of the game in RBOB, Mr. Rhoads. So there you go. I answered your question for you. How's that?
That's interesting, too, because I would think of November, if anything, of being a seasonally weak time for RBOB. I guess we go to Grandma's house and back for Thanksgiving, but I always think of summer driving season as the time. If I were told that I had to buy a call and I had to pick a month without knowing anything else, I think I'd be looking at, May, June, July, as opposed to out there to November.
That more coinciding with that seasonal surge in demand. You're right.
Yeah.
Maybe this will make you happy because we've already broke down most of the paper here this week. Might as well do the rest. The two puts doing a whopping 250 contracts in December, sir. So that floats your boat more, and those were opening a 250 lot. So maybe drawing a little bit of a line in the sand to the 2 strike. By the way, the D's future is at a 260, sir. So reflecting kind of that seasonal weakness.
Yeah. So, and the other one was at about 280. The November, September.
Yeah, we're at about almost 270.
You're really going to have to carry me through the show, Mark.
I'm used to it. So I'm used to carrying people.
We have a good attitude about it. We do the best we can.
Have you met that meatball guy? I've been carrying him for years, so I'm used to carrying people.
I wasn't going to bring that up. But yeah.
All right, let's go out to some of the, shall we say...
At least you know I'm trying.
Yes, I do. Let's go out to some of the more, shall we say, heavily trafficked energy space. Have you been, in your convalescence, have you had a chance to watch, let's say, a Nat Gas or a WTI, sir?
WTI for sure. Just with the smaller size WTI futures, and I know we're supposed to talk about options, but I traded a lot more actively than I used to. Just because I know we're all supposed to be very professional in trading for, profits, but there are people that trade because they enjoy it as much as well. And that's how I feel about trading those really little contracts. It's just fun to be involved.
Those people are savages. We don't talk about them on this show.
No, people are motivated by a lot of different goofy stuff.
So you're back in the crude oil futures. You've recovered from the great singeing of the negative times.
Yes. Oh gosh, yes. And we talked about that. Right when it was close to zero, I put an order in to try and buy.
Wasn't it like 20 cents or something like that?
Yeah.
What the hell?
I was like, how slow are we going to go? And I didn't. Thank God I did not get filled.
Can you imagine buying those for 20 cents and losing how many handles on that as a result? That's one
like 30 or 40 points.
That's one I don't think psychologically you ever get over. You're like, what the hell happened here? That's literally losing the lottery of trading right there, listeners. But yeah, let's go out then. Let's go out to WTI. Let's see how much paper is on the tape. Kind of a quiet week in WTI, even though we are drifting right around that 90 handle right now, 90.10 when we kicked off the show. So net on the week off about a little over about 1 1/3 handle, about 1.5%, listeners. Even though if you go back all the way to last week's show, WTI is off nearly 4%, about 3 3/4%. And let's see, other paper I got about 311,000 contracts. That's not nothing, but it's not a rock'em sock'em robots week either. We're used to seeing north of 400,000 in a pretty active week, and even beyond that on some really, let's say, an OPEC week. Not quite that this week, listeners. And of that paper, about 36.5%, so a little over a third going up. And the October contract has about 28 days to go, so we're going to hang out there. What is the vol in WTI right now, you might be asking? It's about a 45. So if you're kind of looking at equity vol right now, hanging out at around a 20 and saying, that's not juicy enough for me, where can I find more vol? Well, then WTI is more than a 2xer, so something to keep an eye on out there. It's up about a little over 2.1 points on the week. In terms of skew, not a lot of evolution, except for on the calls. The puts are kind of unched this week. They were 6.2% bid last week, 6.3% bid this week. So the bid remains to the puts, if you're wondering out there. Calls, this is very much an equity skew out here. The calls last week, 3.9% cheap. Nobody wanted the calls. This week, 6.2% cheap. So we got a 6.3% bid to the 25 Delta puts and a 6.2% discount to the 25 Delta calls. So that's looking a lot more equity-like out there, listeners, which is kind of interesting. Nobody wants the calls. Everybody apparently wanting the puts out there this week. Speaking of puts, the number one trade out here this week, listeners, was the 75 puts. Actually, I take it back. It was outpaced by the 120 calls. The 120 calls in December are the number one trade out. Even though 75 puts in October were pretty active. We'll get back to those in a second. But the 120 calls, let's see, is it one of those weird verticals again? And you know what it is? These things, I find these things strange, to put it mildly out here. Another one of these one-handle wide verticals, listeners, going up for size. At this point, is it just a ladder? Is it a vertical? Are they buying both? We have 14,600 of the 120 calls going up today and 14,000 of the 121 calls going up today. A total of about 18,300 of the 120s have traded all week. The 121s have only traded today and exactly 14,000. So once again, we have one of these really weird, really tight out-of-the-money verticals going. These have kind of been printing for a while out here. I have yet to ferret out the reason behind it. Maybe they need to do them on splits. They can't get enough on one strike. I can't see much other utility into spreading yourself out. And doing it as a spread certainly makes zero sense. So, yeah, that especially out of the money like that. You might see something like this in the money, more of like a carry play, but out of the money. And, yeah, these are weird. But it's going up yet again. So outside of that aberrant paper, listeners, let's go back to the 75 puts in October. They are the number 3 trade this week. The 75 puts going up 11,500 times. The big day today, 4,100, and the rest of the week kind of even at about 2,500 a day. So they've been opening all week. So that probably accounts for that bid staying about the same out there in the October put wing of about 6.3% bid to the puts out there. A lot of activity in these 75 puts out here this week. Mr. Rhoads, you haven't joined us in a little bit, but this has been kind of a frequent trade we're seeing out here. These extremely tight, extremely narrow, sizable verticals going up in the calls. And I think maybe the last time you joined us, maybe talk about one of these two. They've been going up for a while. What are your thoughts? Why do you think someone's going to put up the 120, 121 vertical 14,000 times in December, sir, in WTI?
When I give you this answer, and this is actually an answer from experience in dealing with a portfolio manager, because they wanted the 120 and a halves.
That's what I said. Splits. That's the only reason it makes sense.
Yeah,
right?
And it's like, what do they do? Stupid. Well, they because it's kind of stupid. But yeah, that honestly, I think that's they're like, I'm not 100% on board with the 120s, and I'm not 100% board on the 121. So split the difference between the two. That's the only reason I could ever really understand why somebody would do something like that. And then I had a portfolio manager that wanted to sell some calls to get out of an Intel position. And that's exactly what he did. Let's say we had 10,000 shares. We sold 50 of the 40 calls and 50 of the 45 calls or something like that. Of course, this was way back when we didn't have dollar strikes. But when you see something like that, that's my best guess on that one. It's not a vertical spread, even though
it's got to be
that's going to be one. But it's not a vertical spread. I doubt it.
Then somebody needs to hit up CME for some $half strikes here, because these are going up a lot. This is not like once. This is every week we're seeing massive. You can't even call them verticals. Yeah, they're pretty much stupids. It's strange. CME obviously notices it. They put up some $half strikes for this guy or gal if they really need the 120 and a half strike that badly. That level of just, I don't know why I'm not going to, I've been down this road before. I will not go down there again. My opinions on stupids are well known, whether you want them for the strike in the middle or whatever the case is. I'm not a fan on stupids. Be more decisive. Pick your strike. Have at it. Don't be wishy-washy, spreading yourself out of cost. It's just like our conversation we were having yesterday, Options Boot Camp, about ladders. I find them less than appealing for the same reason. You're spreading yourself off across a bunch of different strikes. Our friend here doing the stupid, hey, reach out to us. Why are you doing the stupid? Why do you love the 120.5 so much in WTI that you got to throw all this paper at it? Intriguing stuff. Listeners, I know your feelings on stupid, so I won't belabor the point, but they call them stupids for a reason. I'll just put it like that. Since we're hanging out in energy and it's doing a lot of paper, let's go out to nat gas really quickly as well. Mr. Rhoads, anything catching your eye in the world of nat gas this week, sir?
No, I've been beyond the main things I look at. I've been so bedridden that I have not been paying much attention to nat gas. I know that apparently I think I heard in passing that it had reached like a couple of them had reached new contract highs last week. Am I right on that, or is it backed off a bit? I'm the best guest ever.
Now I was going to make a joke about your own personal natural gas, but I will demur in favor.
You don't want to come around me these days.
That will demur in favor of the quality and the family-friendly rating of the show out here. Let's go out to nat gas and see what we are seeing, listeners. Nat gas right now at about a 920 on that front future, so threatening that 10 handle, not quite there right now. A decently active week, again, all things considered. 356,000 contracts on the tape, so not nothing, but also not north of 400, 450, or well beyond, as we've seen nat gas can do on some occasions. Of that paper, kind of trading like an equity, about exactly a third going up in the contract that goes away next week. We're not going to hang out there. We'll go a little bit farther out. We'll go out to the October contract that has about 40 days to go, and we will hang out there. That did 25.1% of the paper this week, so no slouch there as well. The vol in both of them still pretty frothy, if coming in a little bit this week. The vol in the October contract that has 40 days to go and 81.3, off about 4.6. If you look at that near dated contract goes out next week, then that's about a 76, almost a 77, off about 3 points. Still many multiples of the vol you're seeing in a lot of the other products that you are trading out there right now. In terms of skew, last week the puts 5.2% cheap. This week 8.5% cheap. So the puts getting cheaper, and the calls were where the action was last week. That remains the case this week. 9.2% bid last week, 8.8% bid this week. So let's get out to see what the most active contract is. That we have to go back to the weeklies. We have to go back to the SEP contract, the 8 puts doing 14,600 contracts this week. The big day today, 6,100 today, 4,500 on Monday. That was opening. And 2,700 on Wednesday, 1,400 on Tuesday. Kind of mixed opening to closing all throughout the week. So it looks like some back and forth on this 8 put strike. Total, again, of 14,600 contracts here. And then behind that, we have, looks like the 10 calls also going out next week. About 11,000 of those. The big day also today. Today, a big day for nat gas. 4,500 today, 2,800 on Tuesday, 2,000 on Monday, 1,600 on Wednesday. It looks like closing throughout the week. So some folks thought we were maybe hitting the 10 handle by this time next week, or maybe afraid of it. Either way, they were closing out their paper. It looks like most of the week here on the 10 strike. And that's been an interesting strike, one we've been watching for a while here on the show. It seems like, though, the focus has shifted elsewhere, listeners. We see the 12 calls. So how's the 12 strike sound? Again, we just talked about those going up 8,100 times out here. Actually, we didn't. We skipped them. We'll get to them now. The 12 calls going up 8,100 times in the October contract, listeners. The big day again today, nearly 3,000 today, and then 1,800 pretty much the rest of the week, mostly opening on this one. So maybe if 10 is not rich enough for your blood, allow me to present the 12 calls for your entertainment and or trading pleasure. Also, the 14 calls going up 6,100 times this week. Again, 4,000 of that today. So today is where the action is coming in nat gas. Obviously, we're seeing some interest out there today. Also seeing the 5.5 puts, 6,500 of those, and the 7 puts going up 6,300 times in October this week. So it's not all calls all the time. It's just mostly calls. And then how about 15? How's the 15 strike sound? This is actually November, listeners. The 15 strike in November doing a whopping 2,500 contracts this week, including 1,100 today, opening all week long. So you're saying 10 strike, not rich enough for my blood. Not even the 12 strike. I want the 15 strike. Those are trading, again, nearly 3,000 times here in October this week. Let's look really quickly, see if we can see any other fun. A lot of 3 puts going up. You get out into April and May of next year, 3 puts looks like a strip of 3 puts going up about 4,000 times in April and May and then June, 3,920 times to be precise. I also see the 3 puts going up in July and August, 3,850 times, and also September. So yeah, we got a nice three-legged strip going up twice here across all the months, all on the 3-put strike night this week, listeners. So interesting stuff there. So it's not all crazy out of the money calls. Again, it's just mostly crazy out of the money calls. Intriguing stuff. Mr. Rhoads, anything else catching your eye in energy? Or if not, where should we hang our hats next, sir?
You didn't. I don't think you mentioned it, but the skew is almost a mirror of the CL skew of the WTI skew. It's like it's all tilted in nat gas to the call side versus tilted to the put side on the with the WTI.
You are correct. It is not an equity skew.
And
it's very much the opposite.
I don't ever really remember seeing that sort of skew divergence between two energy markets.
Well, it's kind of showing in our movers and shakers this week too, right? We have energy on both sides, which is strange. Usually a complex is going to light it up in one direction. This week, we're all over the place. Dark side, light side. So yeah, it's kind of a weird week for energy, all things considered, sir. But outside of energy, where should we go next, sir?
Oh, let's go to equities, just because they're finally coming back and we want to give them some love.
I think we can make that happen. All right, to the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the wonderful world of equities. Go into that drop down, listeners, pop out of energy. And luckily for us, they are alphabetically adjacent. Go down one to the equity indexes. We're going to go in the U.S. Index E-mini. And we're going to hang out in there for a lot of our living. Before I do that, let me set the table from a vol perspective. Listeners can't really talk equities without talking the flip side of that coin, which is vol. Let's start with the VIX of the small caps, a.k.a. RVX. 24 and about 3/4 up a whopping 0.01. So it is unched from where it was this time last week, listeners. VIX cash keeps flirting with that 20 handle right about a 1980 when we kicked off the show, down about half a point from where it was this time last weq. VVIX 86 and about a third off, nearly 5 points from where it was this time last week. VVIX, of course, the volatility of volatility, listeners. VolQ, we just had the creator of VolQ, Scott Nations, on our Pro Q&A on Tuesday. Check that out if you haven't on our Pro side, listeners. And if you haven't joined the Pro yet, what are you waiting for? TheOptionsInsider.com/pro is the place to go. You can get access to that and all of the other many great Pro Q&As and options oddities we've done over there for your listening pleasure. VolQ 2367, down about not quite 0.9 of a point, almost 0.85 over the course of the past week. That puts that VIX to RVX spread right about exactly a 5, about half a point wider than it was this time last week. And the VIX to VolQ, so the S&P to NASDAQ vol spread, a little bit shy of a 4 now, 387. That's getting a little bit tighter, about a third of a point tighter than it was this time last week. Mr. Rhoads, this is where you typically hang your hat in the world of equity volatility. What is lighting up your tape out there these days, sir?
I am honestly still amazed that VolQ hasn't fallen to a discount relative to VIX yet. It typically spends about 40% of the time under there, and it's been I think we're only about 10 or 15% of trading days this year has VolQ fallen to a discount relative to VIX, and I think it's only once since January that it's happened. It's been kind of ridiculous. So I keep waiting for that volatility, that at the money technology stock volatility to come in relative to VIX, and it just doesn't seem to want to do that, and it's breaking down relative to its history. Same thing with RVX. RVX is at a nice premium, but both the small caps and tech stocks have been catching up with the S&P 500. And I'm just a bit surprised that the spread between the respective volatility indexes hasn't come down some.
Yeah, we're seeing small caps right now just within spitting distance of 2,000 again. So the Russell 2000 almost back at 2,000. So by the way, that would have been a good question. Should have joined our chat if you were able, or this would have been a good question for Scott, the creator of VolQ, to discuss his thoughts on that spread and why VolQ not trading at a discount right now to all things VIX. Let's get on out to the land of small caps. Listen, like I said, nearly 2,000, 1997.80 to be precise, off a whopping 19 handles, or about almost 1% on the week. So giving back, it was north of the 2,000 handle. Listeners, not quite there right now. In terms of action, you're closing in on 20,000 contracts. So not the most active week, but not the lightest week out there as well. Looks like about 30% of that paper coming a little bit farther down the rabbit hole here, down to the SEP contract. Has about 29 days to go. So it's not like a typical equity where it's all going away tomorrow, which is refreshing. The vol out here at 22 listeners, which again is a little bit shy of that 24 3/4 we're seeing with RVX, but RVX is kind of more of a rolling 30-day amalgam of a bunch of different things, including the skew. We're just looking at the at-the-money vol here, going out about in that same time frame, almost 30 days. In terms of the skew, speaking of said skew, the puts 13.2% bid last week, 12.6% bid this week, so coming in a little bit. The calls last week, 9.5% cheap. This week, 8.5% cheap. So calls getting a little bit more bid, but not a huge evolution out there. And in terms of action, the big dog out here this week, well, this is not the strike I expected, which is why we run the show. Actually, two strikes that are surprising. First off, the actual most active trade is actually out here in the October contract. The 2250 calls doing 1,664 this week. So you folks are usually asking about smaller delta type calls, and these tend to fit the bill. 2250s out here in October. Again, that was all in one day and all opening. So opening, no verticals, no other spreads against it. Looks like it was just straight up 22 half. Actually, looks like it might have been a risk reversal because we're also seeing on that same day 650 of the 1680 puts going up on the same day. So either we have a strangle, listeners, or a bit of a risk reversal. Mr. Rhoads, highlight that one. The 1680 22 half risk reversal / collar, or perhaps strangle in small caps. How's that float your boat, sir?
That one would make sense to me as a collar more than anything else. I don't know, and I don't know what the premiums were on each of them, but I would be worried about some sort of flush going in. I know I've been very bullish the past few times I've been on with you guys, but I would not be the least bit surprised if we get some sort of weird geopolitical event that puts us under pressure for a couple of weeks. So a collar like that would make a lot of sense in my mind. And then there's just so much uncertainty in the world. 250 points higher from here. What's that? 12.5% on a 2000 index. You're giving up anything beyond 12.5% if this is a collar. So that's why I think it's a collar. Just because I like the levels with it.
Yeah, I don't hate it. That you actually answered another question I had for you, sir, which is we haven't talked to you in a little bit. We are hanging out right around that 4,300 level in the S&P, nearly 2,000 in the Russell 2000. So these are somewhat lofty levels. It sounds like you're maybe dialing back some of the bullishness here, sir.
Yeah, I'm waiting for a dip to maybe buy back in. I just can't see us getting through the next couple of months completely unscathed. So I think there's a better chance to get back in. I mean, I segregate long-term and short-term stuff that I do. Long-term, I bought in and I'm still in a few months ago. But the short-term trading around stuff, I'm flat right now. Actually, I'm slightly short volatility right now. That's about it.
Interesting.
Also, you shouldn't trade when you're not 100%.
Yes, that's.
I'm being serious. I closed a bunch of stuff out after I missed. After I missed this program, I was like, man, I got to take my trades off too. I'm a mess.
That's words to live by. Yes, I have definitely discovered that over the years. That's why I didn't do a lot of trading over the last month when I wasn't out there 100%. But you're right. Not to turn this into vol views, but that steep contango we're seeing in the VIX futures right now is definitely giving me a lot of pause on this market because it's not just going into November; it's going beyond it into next year, right? And so that's giving me a little bit of reticence on this market. So I can get behind this guy. This is indeed a collar. What do you think, listeners, on the small cap? 1680 22 half collar. You like that out there? Well, hit us up. Let us know, listeners. As we keep on rolling, we did see our old friend Chicago Wheat. Once again, a frequent offender there in the list. So maybe we'll head out into the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody. Welcome to the grimy, the dirty world of ags. We're going to kick things off. Go into that drop down, listeners. Pop out of equities. And you're going to go all the way up to the top of the list to ags. And we're going to stop in grains and oilseeds. And then go 2 notches down to SRW wheat, a.k.a. Chicago wheat. That's where we're hanging out. A pretty active week here, 100,000 contracts on the tape. So Chicago wheat back in action this week, even if it is off over 8%. from our show last week. Mr. Rhoads, I know when you've been convalescing, sir, that top of mind for you, in addition to recovering your health, was staying top of mind of the ag markets, was it not?
Oh, of course. Got to keep up with what's going on because they're going to give us a clue as to what's going to happen inflation wise. So yes, I have been paying some attention to them. They went one direction to the extreme. Now they're kind of going to the other direction of the screen, to the extreme, sort of based on, I guess, the world coming to a halt for a while. I don't know. I can't quite figure out what the scenario is that's depressing commodities so much unless it's the anticipation of a nasty recession or even a global depression.
We are seeing some depression out there, at least from my price perspective. Coming into showtime, 730.5 for that front future in the Chicago wheat. That's off 75 handles, or about 9.3%. So it has, if you just go from this week, the losses are even worse, listeners. In terms of action, like I said, 100,000 contracts. And of that, it's trading like an equity again. 43%, so 43,000 contracts going up in the SEP contract that has about 8 days to go. We might have to make an exception to our rules, listeners, because there's a lot of paper going up in that one contract. Let's just make sure. Yeah, I think we'll have to go up. We'll do it. Why not? We'll get into the weekly. How often do we talk the weeklies in the ag, listeners? Not often. So let's go out a full whopping 8 days and see what's lighting it up out there. By the way, the vol in that contract, such as it is with a week to go, about a 39 is off about 1.3 points. In terms of skew, the puts last week, 2.5% bid. This week, 3.6% cheap. So the puts swinging to the dark side. The calls last week, 1.5% bid. This week, 3.2% bid. So the calls getting a little bit juicier. The puts getting cheaper. And in terms of the most action out here on a pretty active week, it was the 700 puts doing 3,300 contracts. Actually, total 3,900 contracts on the week, including 3,300 just today. So today, pretty active day out there, listeners, putting on some numbers. And otherwise, a quiet week. We're seeing 100 here, 100 there. Then today, 3,300. So blowing the doors off there today on the 700 puts doing 3,300 contracts out here this week. So they were closing all week coming into today. Obviously, we don't have today's OI numbers. And right behind them, hot on their heels, we also have the 800 calls doing 3,100 contracts, 2,100 of that going up today. 500 yesterday, and the rest kind of scattered throughout the week. So 700 puts, 800 calls. We're hanging out at about a 730. So it kind of makes sense. We're seeing some even number trading out here on some of these strikes. Let's look a little bit farther afield. 2,500 of the 820 calls. So if 800 is not doing for you, 2,500 of the 820, 1,600 of that today. And we also have the 770 puts going up about the 8.5 calls going up 2,500 times. Not really trading a lot today, which is surprising. Most of that action actually going up yesterday. 1,100 contracts yesterday, and then 400 and change the rest of the week. Most of that closing. So closing on the 8.5s, that makes sense. I don't think we're going to, I'm no wheat expert, but 850 by this time next week could be a bit of a bridge too far. And then we have the 770 puts going up about 2,000 times. The big day for those actually Monday, about 850 on Monday, most of that closing. About 700 today, the rest scattered throughout the week. So intriguing stuff out here in the ags. I'm just looking for any other interesting or aberrant prints outside of this 8-day contract. Let's go out to October. We got the 750 puts doing nearly 2,000 contracts, about 1,800. The big day actually, and again today, 1,162 today. The rest scattered throughout the week, mostly opening here. So maybe we're also seeing some rolling from this SEP contract out to the October contractors. That could account for some of the closing we're seeing in those 700 puts and maybe reestablishing on these 750 puts a little bit farther out. Let's see. Anything else? Oh, you know what? I buried one of the leads, listeners. I thought ags don't usually tend to trade all in 8 days to go. And there is one print here that is a little bit more interesting, going a little bit farther out to December, listeners. It actually would be our number 2 overall trade on the week. We have the 900 calls. This sounds more like the Chicago wheat we know and love here. 900 calls in December, doing 3,600 contracts. Opening all week long, the big day was yesterday, 1,850 yesterday, 1,250 today. The rest scattered throughout the week. So interesting action to the upside on the 900s. Looks like actually today, the 800, 900, 1,000 ladder, vertical, call it what you will, going up 1,600 by 1,200 times. on those today. So maybe buying the 800s, selling the 900s, and the 1000s 1200 times by 1600 times. The numbers are kind of funky, but it is interesting stuff out here. And since we're hanging out in ags, let's go really quickly. I mentioned it earlier. They do count in the ags, listeners, even though they are not plants. Let's go to the livestock. Let's go down from grains and oilseeds. Let's go down 4 slots. And let's go to our old friend, lean hogs. Haven't checked in on them in a while, but they are number 3 on our dark side this week, off 5.5%. And yeah, they're putting up some numbers again this week. 58,000 contracts on the tape. Mr. Rhoads, I know you. I know, even though you're ill, when you wake up in the morning, you have your coffee, you do your morning routine, and then the first thing you check when you fire up your data is lean hogs, is it not?
Of course it is, because eventually those things are going to be turned into bacon.
Which goes well with your breakfast. So you're just pricing future breakfast.
One of my favorite meals. Yes.
Pricing future breakfast, Mr. Yeah, 58,000 contracts. That is nothing to sneeze at in the lean hogs, sir.
No, wonder what you always say. This sounds just horrible, but when I see something that's like a big old outlier like that in a market that doesn't trade too much, you got to wonder what farmer in what state knows something or thinks he knows something that nobody else knows.
It's the equivalent of the Man United, right? People piling into Man U. This week, it is the lean hogs. Yeah, compare that to your RBOB doing 1,900 contracts, sir. Lean hogs wiping the floor with it this week. And of that paper, let's see, 69% going up in the October contract that has 93 days to go. So we're not playing in weeklies in the lean hogs, listeners. It's all straight monthly action. In this case, even more than a month, we're going out a little bit. But yeah, 69% of that 58,000 contracts going up out there. What is the volume? By the way, lean hogs, 93.30 right now. So we're hanging out right around that 94 strike in that front future. What is the vol, you may be asking yourself, quite reasonably, in lean hogs? It's a 26.12, up about half a point. So not that dissimilar to the equity vol we were just talking about. So lean hogs, equity. How's that sound for a peers trade, Mr. Rhoads? You buy S&P, sell lean hogs. What do you think?
I've done all kinds of quantitative work on that, and I just haven't found anything.
Can't find.
And now I hit the sarcasm button, so everybody knows that I was. No, I do want to make a somewhat serious point here. If just because you find some sort of mathematical relationship between a couple of markets, unless you've got a good fundamental reason, you probably don't want to trade things against each other like that. So even if I found the best seasonality in the world between lean hogs and the S&P 500, I probably would not trade it because I can't give you some logic behind it.
But it works so well for long-term capital. What can go wrong, sir? Why wouldn't I want to do these crazy esoteric spreads? What's the worst that can happen in lean hogs? Famous last words out here. Let's see what is actually trading. The vol, like I said, at 26. The skew, 4.3% bid with the puts last week, 7.4% bid this week. So puts looking juicy. The calls looks like they've done quite a lot of living over the last week. There were 7% bid last week. This week, 6% cheap. So they've swung fully in the other direction. We now have a nice, healthy investment skew out here in lean hogs, which sounds strange to me. Again, I don't watch the skew enough to know the normal position out here. But it does seem a little odd out here for lean hogs. In terms of the most active contract out here, like I said, 58,000 contracts on the tape. The big dog this week, the par calls, the 100 calls. Makes sense. We're hanging out at about a 93. The par calls going out in 57 days, doing the lion's share of the action. About 5,000 of these this week, listeners. Pretty even throughout the week, except for Monday. Not much going up Monday, but 1,900 yesterday, 1,300 today, 1,300 again on Tuesday. Looks like opening most of the week, so that could account for that dramatic swing we've seen in the call wing out here. Also saw the 104 call. So the par call is not doing it for you. Allow me to present the 104 calls, doing 3,250 contracts. Almost all of that on Wednesday. 2,000 and about 2,100 going up on Wednesday. Most of that closing. So maybe some folks coming in and just dumping a bunch of the 104 calls. Hence the call wing just getting annihilated this week. Either way, looks like a lot of pressure coming in on this call wing this week in the October lean hogs, listeners. Also the 102 calls. So splitting the difference there, doing 3,200 this week. The big day for those today, about 2,000 of those, about 1,000 yesterday, and the rest, the paltry number left going up on Monday and Tuesday there. So there you go, lean hogs. Intriguing stuff. Also, the par puts, the 100 puts, doing a whopping 630 out here in June of next year. If you want to go a little bit farther out here, listeners. All right, Mr. Rhoads, we've done ags, we've done equities, we've done energy. We got time for one more before we get to the listeners. Where should we finish up our tour this week, sir?
Let's do metal just to make sure Uncle Mike is aware of what's going on in silver.
I think we can make that happen, listeners. To the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, let's get to the metals. Go into that drop down, drop out ags, go all the way to the bottom of the list now to metals. Then we're going to hang out in the precious product family. I'm going to go one down, not hanging out in gold this week. I'm going to hang out in silver for our friend there, Uncle Mike. It is also our number 5 mover to the dark side, off 3.65%. How much paper does silver do? Well, about 40,000 contracts less than lean hogs this week. There's 18,000 contracts on the tape versus 58,000 in lean hogs this week. So bear that in mind when you're talking silver and you say, I don't want to look at those lean hogs. A lot of paper going up in lean hogs out there. Mr. Rhoads, sir, what's catching your eye in the shiny stuff this week?
Well, it's just I wanted to see what was going on skew wise as far as with the activity with it selling off and a lot of people scratching their heads. Not just Uncle Mike, but myself as well. I've really been surprised that silver hasn't held in better over most of 2022. It's just underperformed relative to where I would have expected out of it with all the inflationary scares. Now I guess the inflationary scare has gone away, but I'm just kind of, I'm wondering if the metals, and not because of crypto, but I'm just wondering if the metals have lost the go-to place if we're worried about inflation.
Had the metals
they just never really reacted.
Had the metals lost their luster, sir?
They lost their luster. That's right. That was the word that I was looking for.
Yeah, they never really performed at all.
Didn't do what I would hope. I mean, I'm not going to say I was pretty concerned about inflation coming into this year, and I had some silver calls and a few other things on. And the one thing that really did not work, even though I thought my thesis was correct, was in the metals.
You had a brief shining moment when Pelosi went over there to Taiwan, gave you a little bit of juice. But outside of that, the shining moments, pun intended, for precious metals have been few and far between this year. And our friend Uncle Mike has bemoaned that at length on some of our other programming as well. Let's see what was lighting it up out here this week. Like I said, about 18,000 contracts on the tape. Silver at about a 19.5 right now, listeners. About 1.2 points to the dark side, or off 5.8% just this week. So a lot of dark side coming for silver right now, listeners. If you're one of those silver bulls out there, maybe you've been feeling it out there as well. Of that, about almost 20,000 contracts, 42%, almost half, going up in the SEP contract that has 7 days to go. We're going to go a little bit farther out there. We're going to go to October, listeners. That has 40 days to go. And that did 25% of the paper out here this week. So we're going to hang out there. What is the vol in silver, you might be asking yourself? It's close to a 30. It's about a 27 in the October contract. And it's about a 27 as well in that SEP contract that's going out in 7 days there as well. In terms of skew, the puts this week, 1.9% bid. Or I should say, puts last week, 1.9% bid. This week, about 0.5% bid. So puts losing some of their juice. And the calls last week, about 0.75% bid. This week, 2.8% bid. So getting a little bit more juice on the call side. And it looks like the big trades this week, we have kind of a bit of a tie. Two things. Well, 22 calls are taking it, but ever so slightly. It's 22 calls going out next week, doing about 1,200 contracts this week, listeners. 1,000 of that coming on Tuesday, and the rest scattered throughout the week. So not a lot of action outside of Tuesday. It does seem like a lot of that was closing after the paper on Tuesday there. So closing on the 22s, and then we also have maybe some folks just washing their hands of this thing, saying, we're not getting to 22 by next week. Let's get the heck out of Dodge. Also, the 19.5 puts in October. Those are pretty much at the money puts right now. They traded 700 times today, 227 yesterday, and 100 on Monday. Total of a little over 1,000. It's like mostly opening. Again, given the fact that we're selling off, hanging out at that 19.5 strike right now, I could see an argument for wanting to perhaps pick up some of these 19.5 puts if that is indeed what is going on out here. Let's look really quickly. Metals are often home to some, shall we say, interesting prints. I don't see any of those aberrant prints going up in silver. Let's look really quickly into gold before we get to some of your questions to see if we see any weirdness afoot out here in gold. Gold, 1764, so well below 2,000, off another 40 handles or 2.25% just this week. The big trade in gold this week, by the way, 116,000 contracts going up in gold, so a whopping almost 100,000 more than silver. And pretty much double lean hogs as well, so decent paper in gold. 16.5 puts in December leading the dance, nearly 4,000 contracts going up there this week. So puts in longer term puts in gold, I can see an argument for those given the price action we've seen. And let's see if there's any weird upside. Looks like it's the 2300s in February of next year doing a whopping 1,100 contracts. So if you want some upside, 2,300. Looks like no verticals this week, no funky flies, nothing else. It's just the 2,300s in February doing 1,800. That's kind of boring. I wanted a little bit more weird paper this week, and gold's usually good for that. Flies, funky ladders, all sorts of ratios. None of that today, just more straight up upside paper, listeners. As we keep on rolling, let's see what you folks have in store for us. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment, the portion of the show where you guys take the reins, your questions, your comments. Mr. Rhoads, you know my heart is black. No sympathy here. But our chat overflowing with sympathy for you. Options Queen says, feel better, Russell. And Mr. Unlimited says, the doctor gets sick. Wild times we are living in. Feel better. So there you go. Getting some love from our chat, Mr. Rhoads. That should give you a 1.
I appreciate that. Thank you.
And Option God also says, good advice. Don't trade if you have COVID. Close out your positions and wait until your mind is right again. Yeah, having had COVID not too long ago, your mind is not right. So yes.
Where am I?
Trading when you're in the middle of a fever dream, not a good thing.
Who is this?
Exactly.
So no, but honestly, anytime this goes back, that comment actually goes back to when I was at a hedge fund in Atlanta and we were doing really, really well. We had somebody that wanted to double we had 100 million under management. They wanted to give us 100 million. And the guy runs a funds of funds. And he just said, I want to know if either of you are having, it was just 2 of us managing the fund. Either of you are having marital problems. If something dramatic's going on with your family, we want to know so that we know to give you a little slack on the performance for a little while, which I always thought was kind of a neat thing to say from somebody that's getting ready to basically be your boss.
He was telling you that, but also that was code for he's going to pull his money the second you tell him that. So, I'm out. I'm sorry. Marital problems.
No.
I'm out.
What do you mean? Oh, no. So
right,
I've always, I don't know, there's just little things in your career that stick with you. And that's one that's always stuck with me. Hedge fund I blew up at, the guy that was managing it, he was going through a divorce when we blew it up. So there you go.
Always good to have nice blowouts in your back pocket. Yeah. So it's always a good thing. Teaches you many things. Let's go out to our question of the week. Let's see if Vol is blowing it out this week. Our question of the week, right up your alley, Mr. Dr. Vix. Our question of the week this week. Vix is back below 20. Is this the beginning of a new volatility regime or just a blip on the radar? Quite simply, will VIX still be below 20 at the end of Q3, which, of course, listeners, is September if calendars befuddle you? We gave you 3 choices. Yes, so VIX will be below 20 at the end of September. No, it will be back above 20. Or VIX is confusing. Mr. Rhoads, what is your vote, and then what do you think our audience is voting for?
I think they're probably voting that it's going to go back up, unless people's attitudes have completely changed from a survey I did a couple of months ago where I said, when's VIX going to finally get under 20? And the majority of people said not until 2023. So,
well, they were wrong there.
That's what I'm basing that answer on. Everybody's attitude could have changed now that it's like 1950.
So you think our audience is fading this? How they're going back up to the upside in vol? Well, you are correct, sir. You know our audience. They are a dark-hearted bunch, a curmudgeonly bunch. They like to fade rallies, and that's what they're doing. They're saying no. 2/3, 67% say no. We will be back above 20 by the end of September. Only 19% saying yes, we will be below 20, and 14% saying VIX is confusing. I get it. These are confusing times, so I share your confusion out there. Let's keep on rolling here. Let's go out to one more here before we let once in future Dr. VIX rest his vocal cords here and go back to convalescing. Let's go out to Joe O'Keefe. He writes in to say, I can no longer find This Week in Futures options on Google Podcasts. I see the August 12th show on your website, but the podcast is no longer available on Google. Well, thanks for bringing that to our attention, Joe. We will check that out. It should be available on every platform under the sun. If you have this issue, listeners, if you're listening to it on any platform, could be Google Podcasts, something else, and all of a sudden it's not there for whatever reason, chances are something weird happened on that platform, but it's a good thing to let us know. We can look into it. So we will look into Google Podcast. If it's not already back up there, probably is. But if not, it's available there. That's also a good reminder that if you can't find it for whatever reason on your platform of choice, listeners, our content is literally available on just about every platform under the sun. Joe already mentioned he went to our website. You can go there. That's a great place to find the archive of every show you want. Our app, also a great place. I don't plug it enough here on the network. Our app has literally everything we've ever done for the last 15 plus years. So if you want to mainline some options content, you want to go find TWIFO or everything else, that app comes directly from our network distributor, listeners. So there will be no glitches. There will be no missing episodes. It's all there. So if you ever can't find anything, the website or our app are the two best places to go, even though it should be on your iTunes and your Spotifys and your smart speakers and your YouTubes and everywhere else. But good comment, Joe. We will look into that for you, and hopefully it's already fixed. And if not, we'll make sure that it is. All right, everybody. That music means we've come to the end of another broadcast day here, listeners. Don't worry, more in store for you tomorrow. I'll be back at noon Central, 1 p.m. Eastern to discuss the mad world of volatility. Then after that, our buddy Saad from Vesica, a.k.a. Shift Search, to break down a weird week of unusual activity. Was there some shady business in Man U, all that Elon Musk stuff? What's going on in Bed Bath & Beyond? What else lit up our tape? Got to tune into Options Oddities to find out. If you haven't done so yet, theoptionsinsider.com/pro is the place to go to get access to that show. And Mr. Rhoads, if folks want to reach out to you, see what you have cooking, what do you have in store for them, sir?
Anything fun that I'm working on, I put it out on Twitter. So the best thing is probably just follow me on Twitter, which is my full name, Russell Rhoads, Rhoads.
There you go. 2 S's, 2 L's. Rhoads, the way he spelled it, all one word there on Twitter. He's always tweeting about all sorts of fun stuff, vol related and otherwise. Give him a follow on Twitter for a fun time. And of course, you know where to go for a fun time. CMEgroup.com/TWIFO is the place to go to get access to our reports as well as everything else they have cooking over there at CME. And it's a heck of a lot. Blue and Eric's research, all the educational content. You can even get links to our show there if you want to go listen to the show directly. All sorts of fun and a whole bunch more. But it all begins CMEgroup.com/TWIFO. And of course, if you want more info on all things small caps, the vol, the skew, the trading activity, the price action, the research, what's happening now, FTSERussell.com, FTSERussell.com is the place to go to kick the tires and light the fires. Give them a follow on Twitter while you're at it, at FTSE Russell, FTSE Russell, all one word. That's going to do it for us today. Like I said, back again tomorrow, Vol Views, and then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group. the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.